Hey all, welcome to ShareTrek. This is Raj here, and today I'm a very happy camper because the markets are up. That's number one. And point number two, for a change, the market has given me enough to make a decent video, a little bit of a meat in the video, something to talk about. Because in the last so many days, there was nothing to talk about. There's a bit of a word of caution from my side, and I'll explain everything. So let's get started with this video today. Welcome back, friends. We have seen a lot of greens in the market today, and I hope many of you are equally happy. But we have to look at this story a bit carefully. The reason why the markets went up is because there is a feeling in the general community that because of the fact that these banks had to be bailed out due to very interesting circumstances where the government bonds that they held lost market value due to the increasing interest rates. The logic then is that the Fed is going to pause hiking interest rates. So that's the reason why the market has gone up, anticipating that the Fed will hold the interest rates and potentially start bringing down the interest rates so that other banks don't fall into the contagion. Because there's around $680 billion worth of deficit cumulatively in the banking sector based on loss of value of bonds, long-term bonds that were held in their books. That's according to some of the reports that I have read. So it stands to reason that if SVB had this kind of a problem, there will be other banks also who had invested in government bonds, long-term bonds at maybe 1.5% or 1.25%. And the face value of those bonds remaining whatever it is, but the market value falling down means that in the short run, if they need that money, it's not available to them. So the fund is not as liquid as one would have thought. Liquidity is available to those banks, but at a haircut. They will have to lose money. That's what SVB did when there was a lot of demand for money. They started selling those bonds that they had at a loss. But if they were to start liquidating bonds at a loss, then they realize the losses which are accrued in the books. So there is a very clear distinction between these two concepts in case you did not know. Accrued losses just are on paper. So let us say, for example, you bought a share for $100 and right now the market price is $90. Your accrued loss is $10. But the moment you sell the share at $90, you are realizing $10 worth of loss. So as long as the bank have accrued losses on the paper, that's okay. They can continue as long as they are not being pushed to give money. And they can wait it out. If they wait for the long term, when the bond matures, the government will give back their capital, and all the while they would have been earning interest. So they will still be happy. The problem is when clients find out that the assets of the bank are less than they should be and that the bonds have lost, say, 15 or 20% value, then clients get a bit jittery and they want their money. And that leads to a run on the bank, and as a result of which the bank has to liquidate all those bonds, and they have to realize the losses that have been accrued on those bonds. And at some point of time, they cannot meet their obligations, and that's when the government will have to step in. But for a change, the government has been very fast. And I heard remarks from President Joe Biden, and he said that it's not coming at taxpayers' dime. So I'm really happy to hear that, because if it came at the taxpayers' dime, it will only reinforce the notion of all these institutions that they are too big to fail and the government will always bail them out. So that is a positive note this time around. But one of the things we have to remember is that there has been an anti-regulation crusade in the previous administration, and we have Donald Trump on video showing regulations that he has cut. So on one side, he had a huge stack of paper, and on the other, he had a small stack of paper, and he had a ribbon between them. And he had an actual ceremony to cut that ribbon and say that he's knocking out all the regulations so that industry can be free. And he has not done that just on banking, where he rolled off some of the provisions of Dodd-Frank, which allowed the situation for SVB to happen. But he has done that on environment, he has done that on food and various areas of regulation. So We don't know all the things that are going to come up. But let past be the past. Let us look at what happens going forward. So is the euphoria of the market valid? I think at this point of time, for the short term, yes. But look at the long term. Let us play this out and see how it's going to go. At this point of time, what is the biggest political pressure on the government? The political pressure on the government is to make sure that the banks don't fail and the startups are able to make payroll on Monday. And they have accomplished that. So the hot potato moves on to the next topic. And the next topic is going to be inflation. So if the Feds keep the interest rate fixed and inflation starts going up, what is the Fed going to do? The Fed will have to increase interest rates, because if they don't increase interest rate, there will be political pressure because nobody wants inflation. So when they raise the inflation rates, we are going to be back to square one, because there are other banks who have got government bonds and long-term bonds which are going to lose market value. So this is a very, very difficult situation we have been in. And it's all the result of corporate greed, basically. Like bankers know for sure, they know the relationship between the interest rates, yields, and the face value of bonds. But despite that, they were able to do all these things because the regulations that were put in place to hold them into compliance was taken off. So I think the lesson is that capitalism requires a few important foundations that should never be shaken. Number one, there should be consequences for risk taking. So if an entrepreneur takes risks and they lose money, they should not be subsidized. That is true capitalism. And then the losses will be accrued by the person who took the risk, the same way as they get all the benefits for having taken the risk. That's point number one, which has to be very, very important. And second thing in capitalism is basically that each of those capitalists have to be responsible for themselves. You don't need government regulations to do all those things. And the reason why the government regulations started happening is because the capitalists forgot, though in light of their greed, they forgot taking all those risks into account. For example, if you look at the role of a compliance officer in a bank, or the role of a risk manager in a bank, or the role of an environment director in a petrochemical organization, those are all token roles which have been put in place to show that they are doing some amount of compliance. But the power of those compliance officers is not as high. And that's the reason why when there are no regulations, these kind of things happen. And therefore, regulations are a necessity. And regulations are a necessity because capitalism has not matured. And once capitalism matures and proves itself, regulations can be removed. You can't remove it before that. If you do, this is what happens. The lessons of the GFC brought the Dodd-Frank and other regulations, and within 8 to 10 years, it was forgotten, and the last administration started rolling back all of those regulations. Even the train mishap that happened recently, it was because of rolling back of regulations. So that's the big lessons. Now coming back to what's going to happen in future, why I would be very careful about the greens in the market is that sooner rather than later, we are going to have inflation reports, economic reports coming in, showing inflation, showing employment level, showing purchaser price index, all those catalysts which move the market. And if we get a very strong employment report and if we get a strong inflation report, then the Fed is going to be under pressure to raise interest rates. And when push comes to shove, we don't know what they're going to do. And at that point of time, there is going to be a heck of a lot of volatility in the market because some parts of the market will feel the Fed will raise interest, and the other part of the market, which is greedy, will anticipate that the Fed is not going to raise the interest rates because then other banks will go down. So this is the rock and a hard place kind of a situation that the Fed is going to find itself in. And this is what is going to be the difficulty for the government also going forward. And therefore, I hope and pray that we have a benign inflation report, and I hope and pray that the employment numbers are not as strong. so that the government and the Fed get a little bit of a breather while they try to put regulations in place and start getting all the actors into control. So that's my 2 cents on it. I would like to hear from you. Put it in the comments below. And meanwhile, let's go and have a look and let us gloat a little bit on the greenery that we are seeing in our price charts today. Let's go to the TradingView platform. Well, here we are in the TradingView platform, and I'm looking at the NASDAQ futures market. And as you can see, we are above the line of support, and we have gone up today. It's a doji candle, and as I can expand this for you to show you, see, the market has got indecision out here. There is a wick on the top and equal size wick at the bottom, and trading in a range bound manner in a very narrow range. So the markets are having a double take on this. They are willing to take the plus that has come in, but they don't know it's going to last. So this is exactly how I feel. And one has to be very careful in the market. This is the futures, and it's showing a 0.32 positive for tomorrow. So NASDAQ's future is bullish. Let's go to the indicators. And if you look at QQQ showed a bounce off from the support line of 286.35. And the MACD is also trying to improve, but it's still bearish, and momentum is also below average. But it went up 0.74 today. S&P 500 also tried to bounce back. It is back into the bear channel that we have here, but I don't know if it's going to stay up there because MACD as well as momentum is weak. Dow Jones is also down. It managed a really good jump up, but if you can see this green inverted hammer out here, that means the bulls have not been able to succeed to pull it up. So there is a lot of skepticism out here as well. Russell's index also was positive today in terms of where it started and where it ended. The candle is green basically because it started low and it went up, but it stayed just above this line of support at 172.14. So everywhere that you see a green candle and you see a negative trend in the change during the day, you should remember that the green candle is because the price started very low and then it went up, but it ended below yesterday's pricing. So that's the reason why those candles are green, but they show a negative when you look at the overall movement for the day. So that's what has happened, and VIX has spiked up very heavily, and it's gone and ended at 26.51, which is a very, very volatile situation to be in. And US dollar index has stayed very range bound, and it gained only 0.04 at this point of time. And I think the US dollar is going to suffer because the condition of the economy doesn't look very good, with weakness in the banks and the specific kind of problem that the economy has right now. If they raise the interest, then that's going to cause a problem. And if they don't raise the interest, that's also going to cause a problem. So once inflation no longer remains a problem, it will be easier for the Fed to solve these issues. So let us see what happens going forward. Now, let me go on to look at the genomic companies that we have in our watch list. And I'm just going to sort this out. So if you look at the biggest gainer, it is Illumina. It went up 16.97. And I'm just going to zoom this in so that we can look at it in context with where we thought we would be in due course at the end of the year. I had thought that we'll be at 235.88. At that time, it seemed fantastic. But today, we touched 235.88 and came back at 236.82, and we came back. And we have a very bullish MACD, and we also have a bullish momentum, which is above average, and it has been a sharp spike. And if I look at the news item, there is nothing major out here except a news item that says Illumina confirms ICANN plans to nominate 3 board members and shares raised. So it's an activist investor. So there will be a feeling among shareholders that value will be unlocked, and also potentially the Grail issue will also get resolved. So I'm also bullish looking at Carl Icahn getting 3 members on the board out there. So this is looking good to me. Bluebird up 12.71%, and we have formed a bullish harami out here, which is again a Japanese candlestick pattern, which is bullish. But our momentum and the MACD do not support bullishness. So we'll see what happens to this tomorrow. Let me also, before I go, look at news, if there are any positive news. There is no new news for Bluebird Bio. Fate Therapeutics went up 10.45. It kind of nullified the previous day's negative movement and gained a little more. But still, the momentum is also below average, so I don't know if it can be sustained. DNA was up 8.87%. It's at 1.35, still way below the price at which I bought it recently. So DNA is not at all looking great. Even in the charts, the indicators are looking weak. Editas was up 7.66. It hit the upper end of this diagonal wedge that we have out here, bearish wedge. And our MACD is bearish and momentum is also below average. So I'm not very convinced about it, but I would look at the news and see if there is any news catalyst. There is no news catalyst out here. Maybe it is somewhere else. Just let me check it out. Give me 1 second. There is no new news on Editas, but I'm going to make another video on Editas by the end of this week. So I'll cover all the information out there. MACD is weak and momentum is also weak, so not looking great. Intel was up 6.95. Again, all the indicators are weak, so this is a one-day phenomenon in my opinion. CRISPR Therapeutics was also up 5.78%. CRISPR has got a lot of catalysts, but the formation that it has got here is the opposite of a bullish. This is a bearish harami, and I don't think this is looking good for us. Next, let us look at CRISPR Therapeutics. CRISPR Therapeutics is looking good, but the indicators are weak. MACD is bearish and momentum is also below average, but it definitely managed to gain 5.78% today. I've been bullish about CRISPR Therapeutics, but given the condition of the banking sector and the potential for contagion, I'm a bit skeptical at this point of time. And also, we have to find out if CRISPR Therapeutics has got any money invested in SVB or held in SVB or any of those banks which have had problems. Next, let's go and have a look at Invitae, which was up 5.67%. Again, smart move upwards, but both MACD and momentum are weak and it's not sustainable. PACB was up 5.18%. It kind of cancelled the previous day's downward movement, so it's a neutral at this point of time. However, if you look at MACD and momentum, it's not looking good out there. Beam was up 5.04%. On the whole, most of the companies in our chart have had a green day. It has had a upward movement, but all of their MACD and momentum is looking pretty weak. So I don't think this is going to be sustainable. We are in for a little period of pain, and I'm personally looking at liquidating shares wherever I have profits or break even so that I can hold on for a while. But unfortunately for me, I do not have any positives except in a real estate investment trust where I'm getting yield of around 7% approximately. So I don't want to break it. So I'm going to hold on to that. But if any of my shares had got into that situation other than that REIT, I would have definitely sold them. That's my strategy. Verve was up 4.51%, but again, MACD bearish, momentum below average, and Caribou Biosciences was up 2.90%. And they had a good show on the earnings. So I would have expected them to pick up because they bet on EPS as well as on revenue. And this is really, really good. But unfortunately, the market conditions are bad. So today's positive definitely has got underpinnings on some really good news. But unfortunately, the overall conditions being the way it is, I don't think it is sustainable. And then if you look at IMTX, it was up 0.13%, but both MACD and momentum are weak. Allogene is down 1.40%. It opened up low, but it picked up a little bit during the day, but it could not get into the positive. So it's not looking great. SQZ Biotech is almost at 55 cents right now. Fortunately, I don't have any SQZ Biotech, so I'm feeling very relieved that I didn't play around with it, and instead I put the money on DNA. But I hope DNA quickly gives me a break even so that I can take my money out and hold it for another day. But if you look at the momentum here, it's absolutely dead, and MACD is also bearish. I don't think SQZ is going to survive. God knows what the management is doing at this point of time. It has got notice from the New York Stock Exchange listing standards, and I really don't know what's happening here. I would have expected a reverse split by now. The longer they delay, the more hard the split is going to be. Because right now they're at 55 cents. If they do 2:1, then they will be quoting at around 1.10 per share, and it will hardly take another a week or two before it goes below $1 again. So they'll have to do 3:1 kind of a split. So a reverse split, and I hope they do things quickly rather than late. So despite there being greens on the chart, the condition is not looking good, my friends. And personally, I feel that the market is very weak. And all the positive that we are seeing is like vaporware. It can go off anytime. That's my personal opinion. I would like to hear from you what you guys think about it and what is your strategy. Please put it in the comments below. And I'll catch up with you again. Have a great day. Bye for now.